All right, I think we're up and running. Ah, shit. Hang on a second. I gotta change this over. Need to change this to... Yeah, there we go. Okay, great. I'm usually not on this early. Um, yeah, not really trading anything. I called it a day. I'm actually home now in my home office. So just gonna make a quick video. Over in the MDX Discord channel, there's a special event that's going to start in about 2 hours. So I don't want to step on that at all. So I want to make sure I'm done and out of here. Just going to go over some, just want to make another MDX indicator review video. I'm digging these things, and I got a new cigar. It's a Buffalo Trace. I'm a big fan of these Buffalo Trace cigars. They're actually quite delicious. It's very reasonable as far as price, and I mean, to me, this is a super high quality cigar. So I'm gonna get this thing going. I think I'm gonna give this one a punch. You know, it's a stiff cigar, though. Oh man, I pulled. Look at that! I pulled the cap right off of it. I didn't mean to do that. God bless it. Oh well. That's because my punch ain't that sharp. Yeah, I pulled that cap piece right off it. That's not the cigar's fault. That's my fault. Oh, that's delicious. Hang on. All right. Don't light your cigars with lighters like this. Don't do it, but I'm lazy. All right. All right, so let's just go ahead. Let's review. Actually, I was looking at this, and I want to show you something here on the MDX oscillators. Let me close the oscillator 4. And I was looking here at the Lithium Americas core. And let me get rid of this. This is a pretty... this is pretty exciting to me. Well, not exciting. It's I'm glad I'm recognizing it. See, here on this previous, I have it all kind of scrunched up a little bit. Let me move this up here. The you could see here how we definitely had, and let me just, I'm just for clarity, I'm just going to close some things here. I could always turn them back on later. Let's turn this off. Turn this off even. And let's get this out of here just so you guys can see it a little bit better. All right, so you can see here, and let me spread it out so you can even see it a little bit better. So we definitely picked up a divergence here. Let's turn that yellow just because I like yellow. And you could see here that as the indicator was going up, price was going down. So it's a clear divergence in the oscillator 5 and 4 for that matter. Well, no, in the oscillator 5. Let me add another one just so you could see MDX. Let me add another oscillator 5 on here, and so I could just show you the difference. What is going on here? I got 3 of them in here. Let me close one of these then. Why do I got 3 of them? So in the settings here on the oscillator 5, let me go to settings and let me zoom in a little bit just so you can see it a little bit more clearly. You have this option here to do an oscillator smooth. So let me make sure I have all my divergences turned on. And let me change that to invert colors. And let me just change this one to regular just so it's a little bit more clear. And I'm going to click on the oscillator smooth. So you can see that here, like out on the 4-hour time frame, that it's a little bit different. Actually, let me go ahead and it picked up this big divergence here on the bottom with the smooth oscillator. It didn't necessarily pick up all these other. I happen to like, and I use the non-smooth or the raw QQE data. I like to see the ugliness. I like to see the bumps and the humps. But I could recognize when there's a divergence even if the software doesn't pick it up. But if you wanted to, you could either click over to the or go into your oscillator 5. Just head on over to the settings and click that oscillator smooth button. So here's the difference between the up top here. We have the oscillator out of the box, and then on the bottom here we have a smoothing of the oscillator, and you can see how the smooth QQE or the smooth, however you want to think of it, stochastic, RSI. Ribbon. It's a volume price time ribbon. Whatever ribbon you're used to looking at, it's just think of it as the QQE ribbon. That's probably what most people are familiar with. But you could see here how it didn't pick up. It didn't pick up. It just didn't pick up a divergence there, but it did over here though. You could kind of see, or let's go down even to the 1 hour, and that might show it a little bit more clearly. You can see here on this leg up right here, down here on the 1 hour, that price definitely went down. And the indicator, here on the 1 hour, it did pick it up. And it did pick it up here. Sometimes a smooth QQE will oftentimes pick up those divergences. So even if which is fine, because divergences are super powerful. And but what you should really do is click over to the smooth RSI at times if you want to confirm that maybe there's some divergences that you're just not picking up on. So like if we headed out here to the 12-hour time frame, you could see how the smooth oscillator 5 and the versus the standard or the unsmooth oscillator 5, it picks up different divergences, so you could see for example here way out on the 12-hour, you could see that price was price moved up and then the oscillator moved down. It did not pick it up on the oscillator 5 unsmooth, but because But if you have an eye for it, you probably might have picked it up yourself. So here that picked it up on the 12-hour on the smooth oscillator, but it didn't pick it up. It didn't pick up that divergence on the unsmoothed oscillator. So just one thing I wanted to really point out. It's not a flaw at all within the oscillator. The smooth oscillator will just find it kind of it'll take out the chop. It'll take out the chop from the price action, and it may focus in or put a magnifying glass on some indicators that or some divergences that may not necessarily become apparent when when it's the unsmooth QQE. So I thought that was kind of interesting, or I wanted to kind of point that out. And if you haven't already been doing it, please add that to your repertoire, so to say. And you can see here also too on the MDX Oscillator 5, the unsmoothed one, it did find this. It did find out here on the 12-hour. It did find this divergence here with price action moving down like that. Let me get rid of this so you can see it a little bit better. But here on the smooth, it did not. So use both in conjunction. I happen to like the unsmoothed one, and I like eyeing potentially divergences that the software itself don't necessarily pick up. As far as divergences go, there's a number of indicators. This is a stochastic or no, hang on, that's a shift. Here on the oscillator 4, let me just turn on this. I just superimposed this stochastic RSI with divergences on it. And you can see here, I just put this on top of the oscillator 4. It's just another indicator. It's a stochastic RSI that also calculates or shows divergences. The oscillator 5 has a much better success rate than any other show divergences than any other indicator that I've seen before. So like here, picked up a divergence on the stochastic RSI. Let's see if we could kind of found those on it's not too accurate. It's not too accurate. It picked up some kind of weird divergence right here that so as far as divergences go, I trust in the MDX indicators. They're really super good, but keep in mind though that like any kind of computer program, it's not going to pick up everything, and sometimes it's nice to switch over to that smooth QQE ribbon, which takes out all the chop of the price action, makes it a nice smoothed out indicator. And you might see some indicators might just jump out at you that might not necessarily be there. Oh, I think somebody jumped in the chat here. Hey, Pocane, if I'm saying that right. I hope my microphone's working. So I'm actually just gonna take this out of there. I don't need two clogging up. If I ever want to look at a smooth QQE, just come over here, click on the smooth oscillator, and it'll pick up some different divergences for you. People sometimes ask me, like, what is a divergence? What the current price is an incredible equation that takes into account volume, price, and time. Maybe I could draw it out better. This might actually be better. So what you might want to look at is let me just go over here. So for example, how best to explain what a divergence is? Okay, so let's just draw. Everybody knows what this is. So let's just draw. So we got like a graph here. Can I take off? Let me take off the watermark here. Settings, symbols, watermark scales, watermark. I take appearance watermark. Let's take off the watermark here for a second, and then where is it? There it is. Come on. Oh, I can't even go that far in the future. So let's just pull this back here like this. Let's kind of get that up in the air like that. Okay, so everybody knows this, or what I'm about to draw here. So it's just your basic, your supply and your demand curve, and we all remember this from high school. Did they teach this in high school anymore? Everybody knows this from the economics 101. You got the you got your supply curve, or your supply curve. It's rarely straight like this, no matter what you're analyzing. And you got your demand curve, or your demand line, and then you got your x-axis is quantity, and your y-axis is price, and then your y-axis is price, and then what happens in a divergence? Everything wants to be in equilibrium. That intersection of the supply and demand in relationship to quantity and price. Everything, price always wants to come back to the equilibrium point, and that's the basis of all those economic equations that they teach you in Economics 101 back in, or basic economics that they teach you back in high school. One thing though, I'm gonna draw on a z-axis. Picture this as and hopefully this doesn't get too confusing. And I'm just going to dash that line. Just let me dash that line. So we got our XYZ axis, and so we got so we got the so we got the X, Y, and then the Z axis over here going into the page, so that it's I wish that wasn't so we got the X, Y, Z, axis. That's a horrible Y. Let me make that a better Y. Right. So kind of picture that. So we got the typical, what you see most times is, in a supply and demand graph, is you got the price on your y-axis, you got your quantity, and then you have your function, or your equation, or your equilibrium calculation. That's part of a larger calculation, and it always wants to find that center point right there. That's the equilibrium point right there. That's the equilibrium point. So what happens in a divergence is, for whatever reason, there's a shortage happens, or a surplus happens. So let me go and write that in there too. So up here, this is a surplus, and then down here, this would be your shortage area. Now, one thing you got to think of though is, And then let me keep this right here just so, and that's your equilibrium point right there. So I'm getting here somewhere with this. So for whatever reason, price wants to stay in equilibrium. It'll always strive to go back to equilibrium. Elon Musk sends a tweet out. The government shuts down. For whatever reason, somebody just was like, "Fuck it, I'm out of Bitcoin," and they just sold off, $1 billion worth of Bitcoin, and they were just like, "Fuck it, I'm out of here." For whatever reason, they threw some kind of sabotage, right? They threw their sabos into the machinery, and price temporarily got out of equilibrium. If you picture this as a price volume, we could kind of think of this as price. We could think of this as volume, and we could think of if you got to use your imagination here, but it's not two-dimensional. This equation changes over time. So if you picture going into the page here, this line right here, this is time, and we could think of this one as time. And so the equation is constantly changing, and this is going to look horrible, so you got to use your imagination. So going into the page, price goes up, volume goes down. It's some kind of equation, and then somehow something happens, and we get off of or the perfect harmonic time, price, volume gets out of whack. Now, what it wants to do is come back into equilibrium. Sometimes it wants to come back into equilibrium quickly. Sometimes it takes time. And that is basically what a divergence is. There's a perfect equation. If we so there's a function. This over here, you're making me mad. So there's a oh man, those are horrible. So you could think of these as that this whole thing right here, right, is a derivative of price, volume, and time. So think of this as an equation of where your equilibrium point is. And when that equilibrium point gets out of whack, it wants to come back into equilibrium. And then when we look at our different indicators that are price, volume, and time, all indicators are price, volume, and time. They're all lagging. But when we look at our indicators, we want to, the indicators give us insight on if potentially that perfect equilibrium equation as it travels through time, price and volume, if it is somehow out of whack. So when you see that, it always wants to come back into equilibrium. So that's what basically what a divergence is this very complex relationship over big assets like Bitcoin or Tesla or this very complex relationship between price, volume, and time, and that's basically it. And now sometimes when we do harmonic patterns, or we draw price, or we just pattern recognition in the charts, or we're seeing something in the indicators, or if if you're just doing SMA, simple moving average, like a crossover between the 55 and the 21, that's also a measure of, and if you see the crossover, the 55 and the 21, and it says, oh shit, price should be going down, but price is continuing to go up. Well, that's a divergence. There's many different ways of seeing divergences or locating them, on the charts. This is but when you find a divergence, that's why they're so powerful. And if you could find a divergence in confluence with your indicators, or in confluence with like a harmonic pattern, because believe it or not, when if you can envision this very complex equation, sometimes that equilibrium point likes to move like a bat. Sometimes it likes to move like a Gartley. Sometimes sometimes it likes to move like like a shark. And that dictates the movement of that equilibrium point. So if we could find divergences that also have confluence with, say, a target on a harmonic pattern, or confluence with your indicators, or confluence with established support and resistance zones, you don't want to buy into resistance, or you want to sell into resistance, because that's and hopefully not only do you want to sell into resistance, hopefully there's also a divergence there, which would signal that that this complex equation is off of equilibrium, and it's going to come back to equilibrium. So so what it's you almost want to always have a divergence. You should be looking for those all the time. Like, for example, like this is a great divergence right here. So our oscillator 5 is going up and price is going down. That's a divergence. It's also, and hopefully we had confluence with other things. I turned off everything. I'm not seeing a divergence here, but a potential divergence here could be here on the oscillator 5 is say we hit a retracement here on the price. Like, we come back up and we retrace, and then price starts to turn. Let's say we just did a simple retracement right there to the 382. And it looks like price is starting to turn again. So what would be like a divergence here would be, let's see, like a divergence would be, and then price came down like that. So like say we moved up, and then the indicators kind of came like that, right? Started to turn here, and so right here, this would be a potential divergence that could possibly play out, and something you should really look for. So it's like, oh my goodness, we're poking $18.75 again. Oh, we're gonna crash for sure this time. It's we got ourselves descending a triangle pattern, something like that. But if the indicators is showing you something like this, see, now that is a very bullish divergence. And in a situation like this, I would be looking to buy, because we have this divergence. I would be looking to buy here with the expectation that this divergence here, especially on a 12-hour, like a big time frame like this, that then price would then reverse. And when price reverses, this is what's happening. We have a divergence here in the let me zoom back in here again. We have a divergence where we're off of equilibrium. Our indicators, which are price, volume, and time, that's the information that it presents to you, and it presents it to you in a graphical way. What you have a divergence because our equation, our equation here is at an equilibrium, and it wants to find that spot back up. So always look for divergences. And then I don't know how I got off on this little tangent right here. I was actually wanted to just point out that I just really saw it for the first time. I was looking at I've always have, even on the QQE and things like that. Sometimes the trading view indicators, they don't always necessarily pick out all the divergence. It's only a computer Oh, excuse me. And then I was like, what if I smooth this out? The smoothing of the was a recent update, maybe just a month ago, 2 months ago, and I really never did it, or never really used it or looked at it, but I have recently started to look at it, and I see that it does pick up different divergences. You always want to find a divergence. Always want to find a divergence. I'm not sure if this will pan out right here. I really don't know. I don't know. Well, actually, the purpose on this video, I just really wanted to point out that some of the different divergences. I went down this rabbit hole though, but yeah. So I'm going to close up. Well, let me just see if anybody's even here in the Discord. Oh shit, there are people in here. I was just going to say I was going to close up because Stu is actually coming on in about an hour-ish, and I don't want to exhaust anybody. So that's it, man. If anybody was even listening, I don't know. Does anybody have any comments or questions? And I hope my microphone was working. Otherwise, I'm just going to close it up, I think. And I don't know, maybe chart out some 2023 what ifs. And then wait for 4 o'clock. I got a new cigar. Buffalo Trace. It's delicious. Is my speaker not on? Let me check my man, maybe my speaker's not on. Hang on a second. How do I check that? All right, I just changed my speakers, so maybe that's working now. I literally don't change a thing from one day to the next, and sometimes things just don't fucking work. Oh, I hear somebody now. Jeez, I think I had my speakers off. Turn up the volume there. Man, I hear somebody I got my volume turned all the way up now. I hear somebody mumbling. Oh, I think I heard what divergences. What divergences do I consider the most reliable? Well, you could actually find divergences on just about any indicator. I find actually, and I'll just put it on here too, like ribbon type oscillators. Like here's the QQE, which is you could take this ribbon right here. You could see, actually, let me just throw it on top. Hang on a second. You can see this QQE. Let me move it, move to existing pane above. You can see how this QQE kind of falls right on top of the MDX oscillator. Let me just undo that. And if you're used to looking at something like this, And that white line and whether or not the bars are above or below the line is actually what makes this move. And here where the bars are very high, it's a very, very strong MDX indicator, green. Where the bars are smaller, it's brown. And again, where the bars are big, it turns red. The MDX oscillator, I think, and the divergences that you can see on there is just because they're so crispy. I also do like, let me turn, I like the Schiff, the STC oscillator. And let me throw that one on there as well. And you could, you know what? I'm going to tell you not to look for divergences on the STC just because they could lead you astray. But let me, can I close this thing? Here we go. Let me, on here. I also like the stochastic RSI. I like the divergences that you could find on a stochastic RSI. Here I got it just plugged on top of the oscillator oscillator 4. Let me put that in there by itself. Let me close some of these things here. Stochastic RSI, if you don't have the MDX indicators, I would say divergences on the stochastic RSI, or if you were just looking at the RSI itself, I would say that those are the, if I didn't have the MDX oscillator, I would love to find divergences either on the QQE, the qualitative quantitative easing, or the stochastic RSI. Stochastic RSI with divergences. Let me just throw that on there. So let's see if we could find one here. I don't like this indicator supposedly will show you divergences. Let's see if we can find one here. Yeah, here's one right here. So you have yeah, actually this is a good one right here. So let me close that up. And it actually found it. So you had the you had the, can I draw that in a second? Hang on. Come on, guys. I'm trying to draw. It's too low. So you have that, and it actually picked it up here. I hope you could see that. And you had price action move down here. So if you were just doing a stochastic RSI trading setup, or when you break out of the, when you come from overbought, and we did have a little bit of a pump up, and then price came back down, and then when you see this starting to turn, if you went down to lower time frame, if you see that starting to turn, that would be like your double bottom, and that would be a strong signal to go ahead and enter into a trade. So the best divergences are by far the MDX indicator divergences. I think they're just so crispy. They're so clean. Oh shit! I didn't mean to open that. I just think they're so crispy. They're so clean. But just like I showed you on the stochastic RSI that supposedly has auto divergences, sometimes you're just not gonna see them all, or the computer program itself is not gonna see them all. And if you were in here earlier, one thing that actually, let me just throw it in there again, just so I could MDX indicator oscillator 5, and then let me if you smooth out the humpity bumps, it's going to give you oh, let me turn on all the indicators here, and there's none that are whether it's regular or hidden or bearish or bullish, they're all equal. All those divergences mean is that we're off that equilibrium point. But you can kind of see here with the smooth QQE, like it picked up, it's picking up, it picked up, this picked up this divergence here, where and let me just draw it underneath here so you can kind of see. It picked up that divergence there, and whereas if you had all the humpity bumps in there and without the unsmooth version, I think this is crazy. I didn't realize how awesome this was. I never used, since the updates, I really never used the smooth MDX oscillator 5. And now I'm gonna make it into a regular thing now. I'm not gonna keep both of them up. I'll just come over here and and toggle oscillator smooth. I'll just toggle that button. Wow, what just another mad scientist, fucking genius, smoothing that out. It'll really help you of spotting these. So if your question was which divergences are the best, they're all the best, and you can find them. You could find them just about anywhere. You could find. And again, the divergence is just like the price volume time is just off this equilibrium point, and it always wants to find its way back. And so it's almost like cheating when you have an indicator that's like super awesome that can show you where price volume time, that very complex equation, is off kilter and it's out of equilibrium. Anything you could find, anywhere you find it on whatever indicator. It's almost like cheating because it will always come back to the equilibrium point at some point. So that was a long-winded question to probably something that could have been answered in 10 seconds. They're all good. I've heard wherever you find them, they're all good. You can find a volume divergence. Volume divergences are sometimes, even if just looking at a volume scale, here we go. Less like here's a volume divergence. It's like, holy, less and less people coming together, sellers and buyers. Less and less people are coming together to exchange lithium, but price was coming down, or I'm sorry, that's a horrible example. No, that's a horrible, ixnay that. That's a horrible example. We got a good example here somewhere. Got ahead of myself. I mean, yeah, I guess so. Yeah, less and less people. And it gets, I guess, here towards the end where it peters out and price just moves sideways. Something's got to give. Either the price has got to, the price just can't move sideways like that. The price is going to come out of its sideways action, and it's either got to go up or down in order to keep people interested in buying or selling. All right, I'm going to log off, give everybody a break. Stu's going to come in about an hour. I'll be there for that. And unless anybody has something simple, then I promise I won't go down into a rabbit hole. Yeah. All right, awesome. I'm just going to end this up, and I'm going to take care of a few things, and I'll see you guys all at 4.
See you in a little bit.
All right, awesome, guys.
I guess I should actually look at some charts now and get a game plan, hey?
Oh, man, I hope I didn't fuck you up.
Oh, no.
Okay. All right, well, looking forward to it.